Morning to all of you. My name is Ramesh Subramanyam. I'm the Director General of ADB's Southeast Asia Department. For those friends and colleagues who are joining from outside of ADB, very good morning. In fact, very good early morning for at least two people I know who are going to be speaking. Peter Lewandowski, thank you so much for joining us. Of course, to Professor Albert Park as well, for both of you joining us as distinguished panelists from outside of ADB, and particularly to Peter, given the time difference, I think it's 5 o'clock where you are, if I understand correctly, and the same for our colleague Samir Katiwada, who's also joining from the same time zone. And there may be many others who are in this call. I guess one of the things we'll be talking about is how the world has changed upside down in the last 7 months, and I guess this is one of those features that we are seeing. We are all working from different locations. Thanks so much again for joining this RCI pod. ADB loves acronyms. So Regional Cooperation and Integration Policy Open Dialogue webinar series organized by ADB. Greatly appreciate the work that is being done, particularly by our Economics Research and Regional Cooperation Department. And Sin Yong, thank you so much for giving me this opportunity. In fact, for full disclosure, I volunteered myself to be not just doing opening remarks, but also to moderate, because of the topic that we are going to be discussing is so immensely important for the entire region, Asia Pacific region, well, globally, but also the region that I'm much more closely working in ADB, the Southeast Asia region. As we all know, so much has changed in the last about 7 months. We are all trying to make sense of the socioeconomic impact of the pandemic. There are small things, superficial things. I was just thinking this morning, I was wearing this barong. I haven't worn a tie in the last 7 months. Those are very small things, right? But if you look at the job losses and the spike in poverty, many countries in Asia Pacific have made dramatic progress in reducing poverty and inequality. Good progress made in some cases, but all those gains have now been lost, and countries need to regain all the progress that has been made in poverty reduction and some progress made in reducing inequality. But getting back to the consequences, one of the consequences of the pandemic has been a fairly dramatic shift to contactless technologies. Digital technologies have proved very useful for our fight against the pandemic through stopping the spread of the virus, through contact tracing. E-commerce has exploded in use, and things like food delivery services. Applications such as what we are doing now, Teams, Zoom, Skype, whatever modalities that we are using, have penetrated our daily lives through online education, remote work, business, and social interactions. And what is also becoming quite clear is that these changes are not going to be reversed fully. They are here to stay. Now, if you look at, as I mentioned briefly at the beginning, the impact of the pandemic on businesses and jobs, it's been immensely huge, very dire consequences that we've seen. Now, even before the pandemic, there was a fear, concern that new and improved technologies and the so-called disruptive technologies in the context of fourth industrial revolution might displace many workers. But now with COVID-19 pandemic accelerating, with the businesses taking up more new contactless technologies, we may see what labor economists call as job polarization, which is in the topic of the conference today. This describes a phenomenon where job opportunities shift away from middle-skilled jobs that involve routine tasks that are procedural and repetitive toward high-skilled jobs, particularly, but it could be low-skilled jobs as well. To paraphrase David Otter at MIT, lovely jobs at the top and lousy jobs at the bottom. Will that become a reality in terms of polarization? That's one of the things we'll be discussing today. Evidence of job polarization have been mainly observed in developed economies. Developing economies, research is still emerging. Our Economic Research and Regional Cooperation Department, ERCD, recently prepared new research that has highlighted the risks of the pandemic in further accelerating the trend of digital transformation and job polarization. My colleague and director of ERCI in the research department, Dr. Sin-Young Park, will present the main findings from this work. Sin-Young's work highlights that the pandemic is driving economies into recession, putting at risk as much as 242 million full-time jobs globally, with 70% of these in the Asia and Pacific region. The study points out that the pandemic will likely spur digital transformation of work as well as the workplace, which in turn will have significant implications for labor market policies and how we support education and training for current and future workforce. And that's a good segue for me to introduce Samir Katiwada, my colleague in Southeast Asia Department, who will present his recent work on the impact of the pandemic on jobs, with particular focus on Cambodia and the Philippines. The work in Cambodia was for ADB's lending support in the wake of COVID-19, while for the Philippines, Samir will draw from the work he is currently undertaking for a study of the Philippines Tibet sector. Samir was also one of the main authors of ADB's flagship report, the Asian Development Outlook 2018, on how technology affects jobs. We will, after these two presentations, starting with Sin-Young, followed by Samir, we will have I'm really looking forward to the panel discussion. We have two fantastic, outstanding economists who are joining us today, Professor Albert Park and Mr. Peter Lewandowski. Professor Park is the head of the economics department and chair and professor of economics at the Hong Kong University of Science and Technology. He's a development and labor economist who's an expert, particularly among other things, particularly on China's economic development. And Professor Park also contributed a background paper to the flagship report that I just mentioned, the ADO 2018, on how technology affects jobs. He looked at particularly People's Republic of China's usage of industrial robots and implications for the world of work. Our panelists today, Peter Lewandowski and Professor Park, have collaborated extensively on the topic of technology and jobs. Peter is one of the founders of the Institute for Structural Research, IBS for short, in Poland. IBS is an independent and politically neutral research foundation. Its research studies focus on economic analysis and evaluating the consequences of public policies in areas such as labor markets, demography, education, family policy, public finance, and climate change. All of these are immensely important in the post-COVID era, as we are in the last 7 months have already experienced. In fact, both Professor Park and Mr. Lewandowski participated in the third annual ESA World Bank Jobs for Development Conference, at J4D for short. Peter chaired a session on COVID-19 pandemic, jobs and development, where he also presented his recent research on occupational exposure to contagion and the spread of COVID-19 in Europe. We are very lucky to have both Professor Park and Mr. Lewandowski, and I have no doubt they will generate a lively discussion following the presentations. Thank you all so much. I count, in addition to the presenters, I count 114 people as of now. Fantastic participation. Thanks so much to all of you for joining. And with that, I'm going to request Sin-Young to start with a presentation. After that, Samir will present. Then I'll call upon the panel discussion where both Sin-Young and Samir will participate along with Professor Park and Mr. Lewandowski. Sin-Young, over to you. Thank you.
Thank you, Ramesh. Thank you for a very kind introduction, and also really thank everybody who participated this webinar, RCI Pod, for today's discussion. This presentation draws from our earlier mentioned study. Policy issues that related to COVID-19 technology and polarizing jobs. Ramara, can you go to next slide, please? Well, I think it's very clear that the COVID impact on jobs are quite significant, but the impact have been very uneven. And these seem to be related to three things. First, labor intensity, and then low skill and informality of jobs. Now, the COVID-19 has somehow increased the use of digital technology and so-called contactless technology in all aspects of our lives. It's very unlikely that we are going back to the pre-COVID era. We are seeing this increased use very likely to continue post-COVID. And this rapid digital transformation also has implications for future work and workplace. This will present enormous opportunities and challenges. And finally, our third messages include how the policies can respond. We discussed the three things actually in the policy brief. First, increase investment in digital readiness. Second, develop skills for the digital economy. And third, strengthen social protection to help mitigate the impact. The next slide, please. Well, as we all aware that there are some sectors that are heavily affected compared to others. What really is relevant for us is where do Asian workers work in this environment? Actually, there are some sectors, especially labor-intensive manufacturing, as you can see, and construction, and hotels, restaurants, accommodation, food services, transportation, storage and communication, wholesale, retail, trade, and then as well as the repair of motor vehicles. And these are the areas where Asian workers work, but at the same time are likely to be hit. The ILO and then other studies have already noted that where these sectors are being hit, and also where jobs remain, the jobs tend to remain even during the COVID. First, education services, and second, professional and more technical services, management. Fourth, finance and intermediation, financial intermediation. And fifth is information and ICT technology. So these 5 sectors where jobs tend to remain are actually highly correlated with ability to connect online. So next slide, please. Another important aspect that affects the workers during the COVID is informality of jobs. The informality of the jobs in many Asian economies are actually a bit higher than the global average. And then these informal employment are also highly present in the labor-intensive manufacturing, and also the construction, wholesale retail trade, accommodation, food services, and the information and then communication, transportation. So again, these sectors overlap with what we saw earlier. The Asian employment are quite large. Next slide, please. These informal sectors together with in the sectors that are likely to be hit by the COVID, are also showing a low skill, and then the workers that are involved in this informal sector tend to have a very low educational attainment. About 25% of Asia Pacific employees are having no educational attainment at all, and about half of these have only up to primary education. And as we can see, these days there are also disruption in the education, which will likely have even long-term and more permanent sort of a scar on their employment ability for future workers. So next slide, please. There's three, again, characteristics of the Asian workers that show the high impact of COVID. First, there are relatively high share of low-skilled workers. 50 to 80% of low-skilled workers are found in Asian employment. Also, the education attainment is relatively low, 30 to 65% of total employment, and very large representation of informal workers. So how do we address these changes associated with COVID, and then also ongoing job polarization? First, invest in the digital readiness. Asia shows that a really wide spectrum of broadband access, and then overall access to technology. And to have this digital divide, we are expecting a strong long-term impact on inequality, as the jobs and then the work and the workplace tend to be much more digitalized. We are likely to see that these people who do not have affordable and then also in the high quality digital access will lag behind. Public investment is needed for the ICT infrastructure, digital skill development, and also building the regulatory framework that also promote this digital economy. The use of public and private financial resources together will be essential to build high-speed broadband and fiber network across Asia. Next slide, please. We also see a large number of online workers in Asia. What's striking from this slide is the left-hand chart is showing that online workers in Asia actually provide really a significant majority of the online workers in the world. In fact, India, Bangladesh, Pakistan are top 3 sources of the online workers for the digital platform economy. But the countries where the projects are generated are actually US, Europe mostly. Together with the US and then the UK and Australia actually account for more than half of these online projects that hire the digital workers. And these digital workers from the region tend to be in generally low-paying, the web design, software development, and then very much still the less formalized work environment that provides no protection, no employment protection, no social security. So how do we address then these a bit atypical workers that are emerging and very likely to increase in numbers in the post-COVID world. We need to also, next slide, please. This actually implies two things: develop skills for the digital economy. We saw the region's economy actually provide some upskilling programs, including in Indonesia during COVID assistance. We need to also encourage the subsidies to lower mobility and then connection to the mobile and internet cost. We need to also provide education that have a strong digital curriculum, provide teachers with the digital competency. And we also need to strengthen the social protection for the unemployed and the vulnerable. In fact, in the post-COVID and the future, we likely to have multiple jobs in one lifetime. And we are unlikely to have a very rigid structure of employment that generally more traditional. In that sense, we need to provide more targeted policies during the COVID the transition to help the unemployed and then the most affected. We also need to provide the temporary income support for unemployment and also the social assistance for the vulnerable segment of the society. The labor market reform should also focus on strengthening social protection so that the people who have changing jobs and who need to have some transition between different sectors are also being supported during that transition. And allow those people be equipped with new skills for the next jobs. So, okay, this wraps up my presentation. I'm gonna just introduce the ADB policy brief, COVID-19 technology and polarizing jobs. Over to you, Samir.
Thanks so much, Sin Young. Fantastic presentation. Samir, over to you.
Thank you, Ramesh. Thank you, Sin Young. Now moving on to the next part of the presentation, where I'll be focusing on Southeast Asian countries. Here, what we have done is that we've just looked at Cambodia and the Philippines, just to give a sense how COVID-19 has impacted a relatively small economy like Cambodia and a relatively large economy in our region like the Philippines. In terms of labor market structure, of course, you can imagine that depending on the type of labor market we're looking at, the impact is different. Also, the extent of public health impact from COVID also has an impact on how the labor markets have fared in the last several months. Moving on to the next slide, I'll start by sort of giving a picture on the impact of the next slide. Yes, thank you. The COVID-19 situation for these two countries have been very different. Sorry, what you're looking at in the picture on the left-hand side is the Philippines. On the right-hand side is Cambodia. This is from our own ERCD, has a monitoring dashboard for COVID-19. If you look at the number of cases and recovered and deaths, these are 7-day rolling averages. You compare Philippines and Cambodia, you see a different picture, and also the axes are different. So it's a bit deceiving when you look at the peaks, but the axes are very different for the two countries, because in Philippines the virus has had a more of an impact than in Cambodia, in terms of total number of cases, number of deaths. So we start by saying, okay, the pandemic has had a different impact in these two countries. Now let's see how the labor market has fared. And one thing at the outset, to build on what Sin Young pointed out, is that both of these countries are characterized by a large share of informal employment. And this has implications for how the pandemic has impacted labor market outcomes. So that's the first starting point. The second starting point is both of these countries have seen very good, strong growth in the last 2 decades, both Cambodia and the Philippines. In case of the Philippines, growth in construction, manufacturing, and also IT BPO in the service sector. In case of Cambodia, we're looking at garment, and also the agriculture sector has done relatively well. So given this, let's see how the labor market has fared. Moving on to the next slide. I'll start first by showing Cambodia. Mara, next, there you go, perfect, thank you. So here, what I've done is I've skipped the data and the methodology just to focus on the results, but if anybody is interested, do get in touch with me. I'll send you the technical annex for this work. Just to give you a sense, the picture you're looking at, the orange line is the GDP and the blue one is employment. And we are comparing baseline with COVID. So here, again, using IMF's GDP growth forecast for 2020, it was minus 1.6%. Actually, the internal GDP forecast in the Ministry of Economy and Finance was even more pessimistic than this. And we also did the scenarios for the more pessimistic growth forecast for this year. What we see is that 0.5% decline in employment in 2020 compared to 2019. This is something we see, we project in Cambodia. The next slide will show you for the Philippines. The impact in the Philippines has been even more severe. Here are negative real GDP growth projections for 2020. The range has gone from minus 3.6% to 5.5%. So again, IMF is actually more optimistic than the government itself in the case of the Philippines as well. And here we estimated that a decline of 1.2 to 1.8% in employment. Again, in case of Philippines, relatively severe. Moving on to the next slide. So the rise in unemployment rate, the pictures here you're looking at, the left-hand side is showing you Cambodia, the right-hand side is showing you Philippines. And what is important for us to keep in mind is that the reported unemployment rate in a country like Cambodia tends to be relatively low. And you can see in the picture here on the left-hand side that in 2019, it was about 0.7%. So it's relatively low, but this is usually the case with a lot of the developing countries. If you just look at the reported unemployment rate, it tends to be relatively low, but it doesn't really capture the actual labor market outcome in the economy. But even using that low unemployment rate, you see that we projected that the unemployment rate would have increased to 3.5%, 3.5 in 2021, 3.2 in 2020. So again, a huge increase in unemployment rate. On the right-hand side for the Philippines, in case of the Philippines, the data is better. We have quarterly labor force surveys. So we can actually compare our projections with the actual data for 2020. For 2020, even though we don't have micro data just yet, but we do have the summaries, the tabulated summaries, and we can compare the projected with the actual. And I'll show you a table in a second that actually shows that the actual data is much worse than our projected impact. So in case of the Philippines, the unemployment rate increased to 17.7% in April 2020, which translated to about 5 million additional unemployed workers. Moving on to the next slide. There you go. So this one is the impact of COVID-19 by sector. The left-hand side, the table you're looking at, it shows the employment impact of COVID in 2020 compared to baseline scenario if there was no COVID-19, using growth forecasts from last year. And here we have used elasticity approach to estimate the impact of COVID by sector. We also have data on gross value added by sector as well to come up with these estimates. If you look at this, the most affected sectors in Cambodia in terms of projected employment losses are construction, manufacturing, hotels and restaurants, transport, storage and communications, as well as real estate and business services, and financial intermediation as well. These sectors accounted for approximately 60% of value added and nearly 45% of employment in Cambodia. When we just talk about manufacturing, garment sector is very important for Cambodia. So the impact on the garment sector has been relatively severe, and the government has come up with policy interventions to deal with that. If you look at the best case and the worst case scenario here, you see, of course, the worst case scenario by definition is going to be much worse. So by sectors, you can see the impact. Now, the next slide will show you the impact for Philippines. Here, we can actually compare with actual data as well. So interestingly enough, here, some of the impact by sectors is very similar to Cambodia. The ones we saw earlier, like construction, hotels and restaurants, transportation, stores and communication, manufacturing, real estate and business services, wholesale retail. You see they're very similar to what we saw in Cambodia as well. But look at this. So the right column, the last column on the right hand side, that's the actual sort of impact by sector. So comparing Q1 to Q3 of 2020, if you look at this, for some sectors like construction, our worst case was not nearly close to what actually happened in construction. So if you look at construction, it's 783,000 jobs that were lost, but we had projected 439, even with the worst case scenario, using the growth forecast from Ministry of Finance. Similarly, for wholesale retail trade, again, our worst case scenario was decline in 389,000 jobs. But if you look at the right-hand side, it's about 678,000 jobs that were lost. So again, so actually when we compare the actual data, the impact, that the projected impact using elasticity approach actually might be an underestimation. So what this tells me is that actually if we had a good labor force survey data that was regular, in case of Cambodia, maybe we would see similar picture. But this is something worth keeping in mind, that projected impact is likely to be actually relatively optimistic than actual impact. Moving on to the next slide. Although some workers who lose their jobs become unemployed, others shift to lower productivity sectors and some drop out of the labor force. The pie chart on the left-hand side is looking at job losses and labor reallocation in Cambodia. This is projected. So here, if you look at this, on the left-hand side, a share of workers do become unemployed, 59%. Some drop out of the labor force, and some actually shift into lower productivity sectors like agriculture, wholesale retail trade, and others. So 36% of the ones who lost their jobs moved on to lower productivity sectors in case of Cambodia. If you look at the right-hand side, for Cambodia and the Philippines, the table here, what we can do is we can actually compare Philippines projections and actual. If you take a look at this, the workers who lose their job in 2020, our projection was 1.9 million. The actual was actually 3.3 million jobs in case of the Philippines. Out of those, how many become unemployed? We had estimated 1.2 becoming unemployed, but the actual data shows 2.4 million who became unemployed. There are several who dropped out of the labor force, 749,000 dropped out of the labor force, and some shifted to lower productivity sectors. And you see the shift to lower productivity sectors in case the Philippines was a relatively small share of workers. And I will shed light on this in a second, because this is a very important finding, because normally during crises, workers do move to sectors that are low productive, and because they can't afford to be unemployed. But in case of the Philippines, the reason why we don't see that shift is because the lockdown measures were relatively strict. So people weren't able to move to lower productivity sectors. Moving on to the next slide. Indeed, actual figures for Philippines, again, as I just mentioned, over 2020 Q1 to Q3 confirm a significant drop in labor force participation as well. And labor reallocation towards agriculture did take place, but not to the extent that we saw in case of Cambodia. If you look at the left-hand side, the bar graph, working age population by labor market status, you see that the folks who are not in the labor force, the green bars, increased during 2020. There has been a labor market has improved slightly in the last few months. And again, the blue ones are employed. You can see the employed population also went down significantly in April 2020, which has also picked up a bit in July 2020. This is using actual data. And on the right-hand side, this is change in employment by sector. You see that some of the sectors have added more jobs between April and July as the country has reopened. So labor market has started to improve, as indicated by the July numbers. 2.7 million jobs returning as quarantine restrictions have been eased. 4.9 million workers rejoining the labor force. So overall, around 7.5 million jobs were restored. Moving on to the next slide. And this is using working hours. We have this data, again, because of the good data for the Philippines. The pandemic has had an impact in terms of hours worked, significant increase in part-time work, and also in the number of those who are employed but who didn't work. So the right-hand side shows you that picture by sector. Many workers did lost their jobs, but of course many became part-time, and then some actually were still employed but weren't working. Moving on to the next slide. Yes, yeah, this one. So this is an important slide because this one shows actually the sectors most at risk include those where women accounted for the largest share of employment, particularly among low-skilled, vulnerable workers. The chart you're looking at on the x-axis is female share in employment in percent, and the y-axis is share of the net job losses versus the baseline in 2020. You can see that on the sort of the group on the right-hand side, a lot of these sectors the female share of employment is relatively high, and some of these sectors were also impacted significantly impacted by COVID-19. So one that stands out is hotels and restaurants, and also wholesale and retail trade. For men, it's more construction, transport and storage, and communications, finance for men. So the last slide, the main two takeaways, moving on to the next slide, the main two takeaways from this work is that one, COVID-19 pandemic has had an unprecedented impact on Southeast Asian labor markets, including major increase in unemployment rate, decline in labor force participation rate, and drop in hours worked across a wide range of sectors. The second point that comes out of this work is that some displaced workers did shift to lower productivity sectors like agriculture, but the lockdown measures actually prevented a large-scale labor reallocation, and we saw this particularly in case of the Philippines. So with that, I end my presentation and hand it over to Ramesh. Thank you.
Thanks so much, Samir, and thanks to both of you, Sin Young and you. You've kept most of the time that we planned. Probably I spoke a bit longer at the beginning. Both of you have covered wide ground. The paper on which Sin Young's work is based, it offers a lot of insights. So please do have a look in addition to the presentation that Sin Young took you through. And same applies for Samir's presentation as well. I guess, clearly the message that's coming out, particularly if you remember the last 2 points that Samir made, pretty worrisome, pessimistic, but realistic. So let's hope in the panel discussions how we can bring some optimism into it. Let me first, the panel format would be, I'm going to first request Professor Park to share his perspectives on the two presentations, as well as, of course, any other thoughts or points that you wanted to have by way of overview. And then I'll request Pieter to come in after that. Then we will have a panel discussion where I will also bring in Sin Young and Samir. And as we start hearing from Albert and Pieter, I request all the participants, you can put your comments on the sidebar. You can do so now, or you can wait as we hear from the panelists. So with that, let me invite Albert, please. Thank you so much for joining us again, Albert. Over to you. Albert, your mic is muted. If you can unmute, please.
Thank you.
Thank you.
Thank you very much. It's a pleasure to be here, and I really enjoyed the two presentations, and I learned quite a lot about the situation in Asia and especially Southeast Asia. I thought maybe I would start about thinking about some of the assumptions about job polarization and its relationship to technology. Even before COVID, I think there's this global narrative that middle skill jobs, routine jobs are all disappearing everywhere, including in these countries. And then the question is, how did COVID really accelerate that or alter that trajectory? But I think that initial assumption about the trajectory is also a little bit inaccurate. If you look at the experience of many developing countries or even middle-income countries, there wasn't an obvious, the experience was quite mixed. In other words, there are some countries which saw routine jobs actually increasing over time, routine occupations, and other countries where you saw routine jobs declining over time. And so I think it's important to recognize that heterogeneity even before the crisis to think about how COVID has affected job polarization. Why was the experience a little bit different in poorer countries than in richer countries, this narrative of technology and job polarization? Mainly is because in developing countries, there are other major forces also at work that are shaping the changing nature of work. One factor is structural change. So for instance, in China, I've done some work that suggests that for a good period of the last 15 or 20 years, we actually see routine intensive occupations, especially in service sectors, retail, these were increasing actually. So you don't see strong evidence of wage polarization over time in China. And the other big force is globalization, that poor countries tend to have a comparative advantage in routine tasks. So if rich countries are outsourcing activity or outsource or buying products from developing countries that are more routine intensive, this could mean that the growth of global value chains is actually increasing the routine intensity of jobs in many developing countries, right? And so that's, I think, also important to keep in mind. Now, what has COVID done to these trajectories? I think we see the effects of COVID economically have been powerful and dramatic and very harmful, especially to poorer countries who are less equipped in many ways to deal with the crisis, and also the structure of their economies, as has been pointed out in the presentations, are also more vulnerable to the nature of the economic shocks. But in these, but we need to think about COVID in two ways, I think. One is, if we think COVID is a transitory shock, right, then we see all of these powerful effects. And I think it matters, the nature of the technology in terms of the vulnerability. It matters, can people work at home? Has been pointed out by much resource that the technology really interacts with COVID to affect the magnitude of these shocks. But if we kind of try to look forward beyond COVID, let's think about a world where there's been a vaccine and COVID has ended, then what has COVID really left us in terms of the legacy of the changes in technology? And here, I think, to me, it's not so obvious where we'll end up. Obviously, COVID has highlighted the importance of investments in digital infrastructure to be more resilient to these types of crises. And so I think we should expect that many companies have made investments, maybe perhaps governments have made investments that improve kind of the digital infrastructure. Now, if we think about what that means for job polarization, I think the first instinct would be that this is a kind of a capital investment that is going to help skilled workers much more than poor workers. So actually could widen the divide. At the same time, I think, Xinjiang showed this picture that there's a huge diversity in the penetration of internet use across the region. And if the response is to broaden internet access to a much bigger group of workers and households, then you also might imagine that if that's the response, some of the inequities related to the digital divide could be narrowed, right? It could increase digital access. And so there's going to be this tension, because I think digital divide, we've all talked about bridging the, reducing the digital divide, but it can work against polarization by increasing inclusivity. But fundamentally, I still think, even if that's true, there's an element to there's an extent to which it's still much more complementary to skilled workers than to unskilled workers. Because if firms can do remote work more in many of these countries after COVID, then in some sense, there's going to be a higher return to hiring skilled workers. Okay, so I think this tension will remain, and trying to understand the relationship between these technological changes, and governments need to think about this as one aspect in considering the types of investments that they make. And complementary to that, I think, is the importance of developing social insurance and social protection systems that aren't linked really to employment, that provide broad population coverage. So maybe I can stop there and let Piotr offer some thoughts.
Thanks so much, Albert, for some really very insightful points in terms of what does this really mean, what we are seeing. Is it a transitory phenomenon or going to be a permanent one if you're looking at the impacts? If job polarization, will it become more severe, or is there hope in many of the poorer countries, in the ADB context, or low-income developing member countries of ADB? And also the point that you made on, for instance, the broadband penetration, the increasing penetration could in fact help reduce digital divide. Now, what does that mean for skills development and so on? So lots of very insightful points that you made. Let me invite Peter, please, to share your perspectives. Over to you, Peter. Thanks once again joining for very early in the morning, Peter. Greatly appreciate. Thank you.
Thanks so much for the invitation. And my home office where I'm sitting now, it offers me a view of a sunrise, which is a very rare sight. I don't really get it often, so it's a beautiful morning here. I also learned a lot, especially about the situation in the entire region, and I have to admit that I was quite shocked by the size of the employment shock in the Philippines that Samir showed. In Europe, people are very much concerned about the effect of COVID on unemployment, but actually, the sizes of these effects appear much smaller in Europe, actually, despite all the concerns and talk which is beefed up by the media because Europe is so important. So the media is focusing on that. I guess that one of the factors why, except for some countries like Spain, countries in Europe have been not really affected that much in terms of unemployment, is that a lot of countries learned from the Great Recession and focus on the sort of hour reduction programs and subsidizing reduction in hours and discouraging layoffs that way. So I think it's an important lesson from the Great Recession 10 years ago that was applied now. And obviously, the social security systems which are established and developed help as well. Speaking of technology, I'm also wondering what will be the medium-term effect. And adding to what Albert said, I'm concerned about one potential middle-term development is that in many of these countries where the routine jobs have been declining, these were the services sectors like hotels and restaurants, hospitality, entertainment, any kind of industries that actually involve a lot of human to human interaction and are quite often related to leisure or to, let's say, commodification of home production. As countries grow richer, people tend to go to restaurants and bars and movies much more. And even if countries remove lockdowns, like we have seen this summer in the Northern Hemisphere, people don't really return to the services to the same extent as they were using before. So that shock for these sectors can actually be more pronounced and more prolonged until we actually have the vaccine, which is widely distributed. So these sectors that create a lot of job opportunities, especially in the urban settings where the manufacturing jobs have been declining for a dozen of years, these jobs might be affected a little bit longer than the manufacturing jobs or the IT jobs, which don't really require not only interpersonal contact at work, but also that many contacts with clients, with customers, and with random people. So I'm slightly worried about it. You even see it in Europe, how many firms are now negotiating rentals in shopping malls and how many restaurants are reorganizing into takeaways mainly and so on. I think that will put a dent on this structural change that drives the employment growth in many cities. On the other hand, there are voices that the pandemic will speed up automation and that firms will invest in automation technologies and reduce the demand for labor in a longer term. Again, I'm not sure if this will happen. There are two reasons for that. First of all, we see that there is a decline in private investment. It's quite obvious after you see it. It's rather rare that in the recessions private sector invests more. But I think especially this time when the trade shock affects many countries and firms still learn what will be impact on the garment industry or automotive industry because people reduce the demand for these goods in a way that is kind of unprecedented, and we cannot really apply the lessons from previous recessions to this one. And at the same time, the pool of jobless people is increasing, so that should reduce wages to some extent. That actually creates two disincentives to automate more. So we may see a decline in automation investment, considering that quite often firms automation investments tend to be bulky investments. Firms don't really automate, especially in manufacturing, like little by little each year. Quite often it's a large investment that you do once per a decade or every few years. So this recession, this time of the, let's say, this shock might not be the best period to do that. So I think that may actually slow down the trend of automation a little bit. Thank you.
Thanks so much, Peter. Very interesting perspectives, like Albert. But the particularly the last point that you made is quite interesting. I guess if you look at a point that Albert also picked up in terms of to what extent digitalization is going to be promoted or be likely to see a sharp increase in those investments. Now, your perspective is that it could happen, but it could also be not happening at a rapid pace because of the nature of the labor markets and nature of the preponderance of some of the sectors. When you were speaking, just a thought or a point came to me. We had a dialogue on tourism recently, a few weeks ago. We had the World Tourism Council and the Pacific Asia Travel Association participated. A pretty bleak outlook that given the dependence of many of these economies that Samir and Sin Yong talked about, for the sector to have a full recovery, it's going to be another at least 3 to 4 years, which is a long time. What could happen in that period, we certainly need to look at in terms of given particularly the level of informality in the labor markets in many countries. Okay, we have already two very interesting questions, but before I direct the panelists, all four of them, to those questions, but I'm going to first request Sin Yong first and then Samir for any quick reactions to the points that Albert and Peter made. Sin Yong, any quick thoughts, response?
Well, thank you for sharing those great insights. I'm also sharing some concerns about digital divide, not necessarily only for the current workers, but the digital divide for the young children who do not really have right access to the digital technology, the e-learning programs, platforms, and most importantly, the teachers that are really equipped with some digital competency are not really easy to change overnight, right? Like even in the significant sort of increase in investment in a couple of years coming forward, these are crucial time for the kids, and there are real concern that these kids will have a permanent sort of lagging impact because of the COVID, maybe perhaps the need for the digital transformation is fast, but then the ability for children to catch up in a way, especially with economic slowdown, the affordability of this type of digital education might not be easy to come forward. So that's
great. Thanks, Sin Yong. Samir, any quick thoughts?
Thank you, Ramesh. Just one point each from Albert and Piotr. The one on job polarization, Albert, actually, I completely agree with you that the evidence for developing countries is not quite, at least my reading of the evidence is also similar to yours. I remember doing this work while I was at the ILO still back in 2016. And for high income Asia, we did see job polarization, but for middle income Asia, not so much. So there was still growth in middle skilled jobs. So that you can see actually with the data. The point that Piotr raised on automation, amazing, fantastic point. I hadn't thought of this. Thank you for bringing this up in terms of like, yes, everybody's talking about how COVID-19 could lead to more automation, but the 2 points you raise is that one is decline in private investment. The second is reduction in wages. Actually, it's true. They're working sort of. Are we going to really see a push for automation? Really good point. I think we'll have to see in the next few years how this pans out. Thank you. Over to you, Ramesh.
Thanks, Samir. I was also actually, in relation to the last point you made, Samir, going back to the 2018 ADO. One of the things that you and the others had looked at is the, to what extent it's going to lead to, changes in the types of jobs that we are going to see. It's not that, clearly there'll be upskilling that'll be needed, but in terms of the impact per se, it may not be as bleak as what we think, with or without digitalization. But I guess with digitalization, you've got more implications that you need to look at. Okay, I'm going to first, I think we have a couple of questions from Joel Udota from Uganda. Thanks for joining us. He's highlighted how COVID-19 and the lockdown measures have led to loss of jobs, I guess, across the world. And he's talked about his country, TV, radio learning programs were implemented, but internet and tech penetration quite low. So first question, what would be recommendations for effective digital work learning programs? And the second question is very specific one on Zoom. So I'm probably going to ask Albert for any perspectives on the second question. But on the first one, any recommendations for effective digital work learning programs? Who wants to speak? Albert, your microphone is muted if you can.
Sorry. Yeah, maybe I can just say a couple of words. I mean, one thing that some of the work that Piotr and I have been working on has found that even in the same occupation, in poorer countries, the nature of the work is quite different. In poor countries compared to rich countries, managers, for instance, are doing much more routine work in poor countries compared to rich countries. And probably the most important factor is this difference in technology and computer access. That's what we find statistically. And so a country like Uganda seems like that's the case, that the internet infrastructure is so poor, probably even skilled workers were, also unable to kind of respond to COVID by just working at home if the internet infrastructure is not there. In some sense, that's going to deepen the crisis and the employment shocks in a place like Uganda. And also, in some ways, it'll be more equitable because the skilled and unskilled will both be hit, perhaps, very hard because there's no advantage in terms of the responsiveness of the technology. Obviously, it will take time for the country, not just the country, but the companies and the individuals to become digitally literate, right? So those are definitely important long-term investments for the country. But in terms of immediate response to COVID, I think the comment, reflects that that's gonna take too long, kind of. So what do you do in the interim? And they're trying the TV and using other technologies to overcome crisis, but of course it's going to be limited, right? In terms of, and so I think the message in terms of, again, I always try to think about what's the long-term message. I think one thing we've learned from COVID is that countries really should be aggressive in investments in technology infrastructure, because in the future world of crises and maybe more pandemics, the technology just gives you flexibility and resilience. And so the more that you can embed that and prepare for that, I think countries will be rethinking the importance of those investments. Thank you.
Thanks very much, Albert. I'll come back to your point in terms of public policy. What will be the resource implications later? Any of the other panelists on this on the learning?
Can I just give a bit of a word. In fact, I think Uganda, together with some other countries, I heard also examples of using the TV network to provide a quick sort of learning on how to teach children who cannot really go to school like this during COVID. So like even the probably like all the technology can be utilized during the sort of the crisis situation. They should actually try to maximize whatever the available technology to reach children during during this COVID situation. In the meantime, they do need to increase the spending and think about how to raise future workers in the digital era. I actually feel the importance of these digital curriculum in school. In fact, many. I was actually a bit shocked when I brought my son in Korea during this time. A lot of my sort of friends recommended the coding as like extracurricular sort of the program that my son can be enrolled, and he has been taking these coding classes, which was not very frequent or was easily sort of known in the Philippines. So there, I think the degree of this curriculum readiness for the digital economies is quite different across economies.
Okay, thanks, Sin Young. I'm going to, as the other panelists may have views, but I'll bring them in a bit later. There is a very specific question here on Zoom, on tech company, which is, made heaps of money lately, according to Joel, what he has said here. US and other countries raised points of privacy, could blacklist. Do you think US, for instance, will take serious actions? I guess it's a very specific question, but I want to not deflect it, but there is a broader issue here. Technology knows no borders, and clearly digitalization means there could be more opportunities for globalization. What are we seeing here in terms of big trends, in terms of looking ahead? If countries want to reduce digital divide within countries, which means I think they should be open in terms of solutions that are available and go for the most competitive solutions, or maybe the most innovative or the most effective solutions. So any thoughts on the specific question and the broader issue on what digitalization means for globalization? Maybe I'll start with Albert and then I'll go to all the panelists. Sorry, Albert, your mic is...
Yes. Yeah, got it.
Sorry.
So I want to correct the questioner. Zoom is not a Chinese tech company. It's a US tech company based in San Francisco. The CEO is originally from China, and Zoom has a lot of connections in China and has moved a lot of its work and programming to China, but it is a US company. And I think there's a question about the security concerns. I think Zoom's goal, the guy who started Zoom originally worked at WebEx in Cisco, and his whole goal was to make it more accessible software, which meant they were not as careful on the security controls. But after all of the criticism, I think they're responding. But more broadly to the issues of digitalization and globalization, I think Zoom is an incredibly innovative product. In Hong Kong, our university has bought a Zoom license, so everything we do now is pretty much on Zoom. And I think developing countries should take advantage of these software. Zoom has a lot of, there's a free component to a lot of the Zoom use. And so I think that should only be helpful, in terms of helping everyone deal with the crisis. And then the question is, how do you prepare your own users in your own country to take advantage of global technologies? Are there additional things that you need to do or support, while keeping in mind the obviously concerns about security, et cetera? But I think it's a positive example of globalization myself. Thanks.
Thanks, Albert. Agree with you personally from my point of view. Pieter, any thoughts on globalization and digitalization?
I think that in the digital world, it will actually accelerate. On top of the sort of opportunity for new firms like Zoom to take advantage of that situation, the increasing acceptance of remote work may actually also speed up the offshoring of more services from high income to low income countries. What you're seeing in Europe is that countries that were actually quite reluctant to perform tasks away from the office, like Germany, which is a technological leader, but the share of remote work in Germany was very, very low, much lower than Scandinavian countries or the UK. Probably largely to the organizational and cultural reasons, like there has to be order, people have to be monitored in the office, there has to be, you need to come to the office, integrate, belong to the trade union, and so on. So they lacked in that regard. Now they see a abrupt change, and it's happening in many developed countries. And on top of that, firms are now accepting that they actually may have excessive office space. So I think that this adoption of remote learning might also have a ripple effect to the increasing outsourcing and offshoring of even more digital services as firms learn how to perform these tasks having remote workers. In the longer term, they may actually move more of these jobs abroad and save costs.
Thanks, Peter, which also may have implications for mobility and in terms of traffic solutions and so on, which is a major issue in developing Asia. To my ADB colleagues, any thoughts on globalization, digitalization? Sin-Yong and then Samir.
Well, as you rightly pointed out, the technology knows no border. But I think there has to be some minimum guideline also in terms of the regulatory framework that allows how these technologies are being used and how we actually sort of develop these applications. In fact, there's a lot of uncertainties in regulation from different sort of countries, even regarding the one technology. So some understanding, at least having kind of a consensus on the minimum guideline, and then some harmonization of essential regulatory framework might be helpful for the the developers as well as the users. I don't think this issue is actually confined only to the Zoom. There's a big issue of privacy, cybersecurity, but each country actually have a different understanding of what constitutes the privacy, what constitutes the cybersecurity. Like around the world, there has to be understanding of how to protect the privacy, cybersecurity, and these have to be put in the minimum guideline.
Thanks, Sin-Yong. Samir, that question, as well as there is a specific question from Anna Fink, our colleague, on because she is referring to Philippines and Cambodia in particular, but if others have any perspectives, I'll bring them in. Is it the expectation that over time women will be more affected by job losses? We are certainly seeing it in the short term. Particularly because of the informal sector preponderance, as well as service sector, tourism and so on. And if so, how should the policy implications or policy, direction should be nuanced to address it? So if you can respond to both, Samir.
Sure. Thank you, Ramesh. Just on the regulation first, I totally agree with the other panelists. In a way, the regulation is always playing catch up, right? So it's sort of, we have seen this before in the financial sector as well. So innovation is always ahead, and same thing we're seeing with the tech sector as well. So perhaps we could learn some useful lessons from how regulations have been put in place in the financial sector. That's one. The second, going into the impact on women and the sectors, really, really important point. And we see this, that it is true that a lot of the sectors that have been hard hit are where a lot of women are employed. And this brings the point that all of us touched upon, is about how the nature of work, the type of work would change over time. the one thing that I kind of wanted to bring up here is the sort of this, technology and wage inequality, right? So we saw in the US that 37% of all work can be done from home. But that, you can imagine, a lot of them are sort of non-routine, cognitive, high-skill type jobs. The ones, we call frontline, so essential workers, actually, as it turns out, essential workers are mostly low-paid workers in a lot of these countries, right? So how we look at this is going to make a difference. And going ahead, looking ahead, so the issues regarding, wage inequality, is it going to get worsened because of technology? Is it going to get worsened because of increased digitization? Something really important to keep in mind, because what we consider to be essential workers are the ones who are actually getting paid relatively low. And the other point that goes to, I think maybe Albert mentioned this about, so this will contribute, the nature of the work that is changing because of COVID, because of technology, will also contribute to further declining sort of unions and any kind of organization, right? You can't really organize to bargain higher wages because now we are dispersed all over. If 40% of the work can be done from home, very difficult to organize. So again, I don't have an answer in terms of how women could be impacted more, what kind of policies could play a role, but it's something to think about in terms of maybe social protection is important, maybe skills development, like in Singapore, is important, but something to really keep in mind. But it's very difficult to imagine how the world will look like if this trend continues. Over to you, Ramesh.
Thank you. Peter?
Yeah, I think this gender dimension is very, very important. So first of all, women are more exposed to contagion at work as they are more likely to work in the care sectors. So these occupational risks related to the pandemic are much higher for women than for men, which is probably not reflected in the public policy yet. And there is also this important double burden of care. So all this additional childcare, it actually puts a much higher burden on women than on men. It tends to strengthen the pre-existing division of homework, which is rather directed towards women. So social security systems have to account for that, and public policy should be taking into account this gender gap in care effort and childcare that we're seeing now.
Peter, since we have you on the mic, you talked earlier in your first interventions also about social policies in comparison between Europe and what you are seeing in Asia, where Europe, while the impact in the early days might have been thought of as severe, or maybe because of the focus on Europe, but certainly what we are seeing in the Philippines and Cambodia, at least what Samir presented, seems sharper. So in that context, let me take a couple of specific policies, wage subsidies, in order to keep these workers who may otherwise be losing their jobs. Any experience from Europe? And the second one, in terms of sick leave policies, any experience that you can share from Europe? Because these are concerns that people keep coming to work despite quarantine or social distancing type of measures, because they have no other means of employment, no other means of livelihood. Any quick thoughts on that?
Thank you for this question. So I think the key policy was to, sort of contrary to what is happening in the US, where you fall off people and you have a huge inflow to unemployment, and try to increase the amount of the unemployment benefits. So the lesson from the Great Recession in Europe was that it's probably better to try to keep people, retain employment in existing firms, and try to avoid the sort of waves of bankruptcies that may trickle an increasing number of firms and have this sort of contagion at the financial and at the financial level between firms. So there has been a lot of money spent rather on subsidizing wages of workers who remain employed at firms and reducing the hours, like moving them part-time, or it's essentially about moving them part-time and beefing up the incomes by with public funding. So I think that was quite successful 10 years ago, and it's pretty important right now. And in terms of the social security, there have been efforts of expanding coverage. So for instance, even a country like Poland has a pretty strong labor market segmentation, with people on temporary contracts having a much lower access to all the welfare state arrangements that are there for people who have full-fledged employment contracts. So when the new programs were rolled out now, they were more universal. So it didn't really matter what type of contracts you have. This additional income support was essentially available to all people who lost their jobs, or if you were self-employed and you showed that your revenues are declining, you also qualified. So I think that unconditionality, not in the meaning of losing your income, but rather of forms of employment, of forms of activity you were performing, regardless if you were employed or self-employed or a contract worker. I think that universality in this regard was very important this time around.
Thanks, Peter. And then to supplement what you said in terms of to address the double burden issue, how effective social protection policies, that also is an important issue that we are looking at in a few countries in Southeast Asia. Albert, can I also bring you in any perspectives, particularly on supportive policies? And also there are some long-term issues that are now coming up. Unemployment insurance, which is immensely difficult to introduce in many of our countries. Any thoughts?
Yes, I do have some thoughts. I mean, one of the reasons why the European lessons may not help a lot of people in Asian countries or developing countries is that when so much of the labor force is informal and in small enterprises, it's hard to get the money to these people in kind of employer subsidy schemes, although I think they're important and should be pursued and have been successful in some Asian countries, especially the richer countries like Japan. I think one of my colleagues here did some research showing that kind of unconditional financial support for firms really helped more of them survive, which obviously guaranteed the employment. I think it's better to give unconditional support to firms. If you just pay them to pay their workers, it sometimes just prolongs the unemployment once the subsidies run out. If the firm is not able to survive on its own kind of financial footing, it's going to just postpone the job loss, not avert it. So I think that may be one lesson. And in China, they have, I mean, one thing good about China is that they're in a fiscal position where they're able to respond somewhat aggressively, and they did different things, but one of my colleagues here also did some research on small and medium scale enterprises in China and found that the financial support policies weren't that effective because a lot of the small enterprises couldn't get access. They couldn't figure out how to get it, or maybe the money wasn't really easily available to everyone, as the policy kind of suggested. But policies that allowed them to get some relief in their cash flow, like deferring social insurance contributions or taxes or other things, that turned out to be very helpful to many small and medium enterprises, because it's something that once the policy is passed, they basically can just save money, and it helps their cash flow. So in terms of social protection, and social and unemployment insurance, I think one of the lessons that has been, I think, gaining more ground globally in terms of policy discussions about social insurance is the need to move away from employer-provided kind of insurance models to more uniform benefit models or social pension models or insurance models where you're covering the whole population with some kind of coverage, whether it's minimum income or a targeted social assistance program. Because in poorer countries, anything you do through employers is not going to reach a lot of the vulnerable, And of course, it's hard to finance those programs. And a challenge in all of these countries is that they don't have the same kind of fiscal ability to really do a lot of things that can be done in some of the richer countries during a time of crisis. But I think that's the direction that countries should move, to be honest. I mean, I think we need to kind of unthink some of the older models of social insurance and and learn from some of the newer thinking about how to do these things.
Thanks, Albert. There is a specific question to you from my colleague David Friedman, who's based in Cambodia. He says you identified, Albert, you identified two factors that may slow investments in automation. At the same time, pandemic is creating conducive conditions for more automation, development of automation technology. So on a net basis, are we likely to see acceleration of labor displacement?
Well, I'm not sure automation is a bad thing, and I mean, I think people like a lot of technology change, right? We're fearful of it. We think it's creating job loss, but it could just be changing the nature of jobs, right? And it could lead to other jobs and other things. So I think the fear of technology is sometimes I think most economists feel it's a bit overdone in many cases. But the automation question is interesting. I agree with Piotr. I like to think of it again between some of the more short and medium term effects and the longer term effects. In the short and medium term effects, there's a huge negative economic shock. So wages will go down, firms have less liquidity, they're going to make fewer investments. You know, like in the US, we know that the software companies have done great business with lots of, Fortune 500 or S&P 500 firms. And so business has been gangbusters, but that's because you have really large cash-rich firms that can make investments really quickly in response to the business opportunity. But in a world where firms are really small and whatnot, the liquidity constraints are going to be quite binding. So I agree that it will probably reduce all sorts of investment in the medium term. There's some types of automation that may be helped by the crisis, with the COVID crisis, which are ones that are actually like service robots or things that actually are used to keep social distancing while providing. So that's a fairly narrow group of robot innovations. Certainly not the like industrial manufacturing automation that I think is the dominant kind of force in at least robotization in many places. But then if we think in the longer term, I think it's right that that COVID may lead to incentives for greater automation. In a place like China, we've seen really rapid adoption of robots even before COVID. I mean, such a rapid increase that it's hard to imagine it could be faster. So that COVID is certainly not going to accelerate it, but it's probably not going to change the trajectory. But if you think about it, if you have robots, they provide, in addition to making economic sense if wages are really high and the cost of robots are cheap enough, et cetera. They're also a technology which is resilient to different types of uncertainty. They're more reliable than people. They're certainly going to be more reliable in the sense of dealing with pandemics or other things that affect labor risk. So I think if the lesson that firms learn from COVID is that we just have to insure ourselves from a lot of crazy things that might affect the way we work or even the risk of how much workers are going to cost in the future, then I think those could lead to, accelerated automation. But how fast we see that, it's not clear. But the last thing I want to say from the China case, again, to reinforce this point that we shouldn't necessarily fear automation, is that China before COVID did not really have an unemployment problem, even when it was automating quickly. So it's not as if automation was creating mass unemployment. In fact, it was more a response to labor shortage and higher wages, right? So there's still quite a lot of robust labor demand in the economy to soak up available workers. So let me stop there.
Thanks, Albert. Thank you for covering China. In fact, I had a couple of questions on China, so what you answered covered those. As I'm looking at the clock, we've got 3 sets of points. I'm going to use them to kind of bring the panel towards a close. Our chief economist, Savada-san, has made an interesting point. In Manila, we observe platform economies, such as Grab, Panda, Lala Food, and so on. They have created huge employment opportunities in terms of delivery network. So he is asking inclusion of these platform economies will be critical for individuals and micro and small and medium enterprises. Fair competition policies will play a strong role in mitigating job polarization Any thoughts on this? And then a couple of other points, I'll bring them in later. Any quick feedback from speakers? Pieter?
Yeah, right. I think we actually may see there will be discussion about antitrust policies and so on. So we may see that there is increasing concentration in these types of markets, as the existing companies, quite often global, have a technological advantage, and quite often they also, as is the case with Uber, they may actually be using dumping prices in many markets. So they actually see opportunity here, that's for sure. Probably the two challenges which are there. First is the regulation of labor standards and taxation that touches upon the issues with tax avoidance by firms and transferring incomes. And probably that's maybe a moment in time when all the governments, including the developing and emerging countries, should stress the need to tax profits where they are made, where the customers are, not where the companies are registered, because that might be one issue that also undermines the tax base in many middle and low-income countries. And the other challenge I see here is concentration. Quite often, the network effects play quite a large role, so there might be increasing risk of monopolies in these markets when these larger firms take opportunity of COVID.
I have a couple of quick reactions.
Yes,
there's another aspect of competition policy, which is that in Hong Kong, for instance, Uber is illegal. It's because the taxi companies have lobbied successfully to ban Uber, although Uber exists because people still use it kind of quasi-illegally. And so I think obviously using competition policies to ban innovative technology, ride-sharing technologies, or other sector platforms in other sectors, I think obviously that's a bad thing, because I think it reduces productivity and it hurts consumers. And there's a space obviously for Uber drivers in Hong Kong, etc. But clearly the regulators need to decide how they're going to weigh different considerations. My own view is that it's best if regulators don't regulations should allow this innovation to occur, because otherwise you're losing a productivity force in the economy. In terms of the issues happening in California, where they're saying that the Uber drivers have to be treated as employees, and therefore the government has to, the company has a lot more burden in terms of providing benefits and registering people and stuff. I think obviously it undermines the flexibility and the opportunity that the Uber platform presents for many, I think, people, for informal workers really in the US, or flexible workers who can come in and out. When they need to make money, they're in, and then when they don't, they're out. And so I think that's really not the ideal regulatory response. That I go back to my other point, that it's better if social insurance coverage and other things are delinked from the employer, because that way there isn't this kind of such a severe trade-off of labor standards versus flexible employment. Let me stop there.
Thanks very much, Albert. Again, looking just 2 minutes, I'm going to use two more points that have come from our colleagues, James Villafiorte and Chao Tu. I'm going to use them to ask each of you for feedback before we conclude the session. James has made the point that I think partly also referring to both Albert and Pieter, the points you made in terms of public policies as well as public sector readiness. Government readiness is quite important in terms of technology adoption. The speed of technology adoption will also be dependent on how fast governments can digitize. In countries where you have e-government or e-governance, adoption of technology in other areas has been faster. And here the type of regulation, which I think many of you talked about now in terms of how it'll hamper or speed up innovation. There is a whole host of knowledge and capability or capacity development that needs to be done. And then finally, my colleague Chao Tu from Myanmar, he's asked a question which could be a nice one to close the panel with. What can an institution like ADB do in the short, medium, long term, any 1-2 priorities from each of the speakers. So I'm going to start with Albert first, and then go to Peter and Sin Young and Samir to close. Albert? Albert, your mic, if you can. Sorry.
So what was the first question again?
Sorry, first question was more a comment that speed of digitalization will depend on how ready governments are.
So I think governments need to be proactive, obviously, I think, in making these messes. That's a point I made earlier, but I wanted to emphasize that, we've done some work trying to understand to create something called a digital life index for cities in China, about how much people actually use online services, whether it's government services, financial services, or entertainment, or their news, or social media, etc. And one thing you find is that there's huge gaps across cities within China. So there's huge disparities, there are huge divides across cities, even in China, where I think overall the government has done a pretty good job providing kind of basic infrastructure, including internet infrastructure. And so I don't think you change those things very quickly. They're kind of longer term investments, because people have to be capable of using those services and understand and incorporating into their lives. And then the supply side has to react to that demand. And I think it certainly makes sense for governments to promote this, either through their own services, to try to get people more accustomed to using digital services and just incorporating online into their daily lives. And that will further the inclusivity of digitalization. But that's going to be a slow process. But I think that should be a priority. Now, in terms of what ADB can do, I'm not sure. I think understanding these problems, I tend to focus sometimes in the insight and the research. I think the research division at ADB, I know, has been focusing on technology and jobs as a key kind of research area, and I think that's great. And I think understanding the changing nature of work is going to be really important for quite a while now, because technology is changing so quickly, in addition to the kind of global crises and all the other things that seem to happen on a on a regular basis. So I would support continuing those efforts. In terms of the lending side, I mean, I think it has to draw from the insights that we're trying to understand in terms of what are the priorities. And one thing I also wanted to point out is that although we're talking a lot about we need to prepare people for the future nature of work and being more non-cognitive and high-skilled, but the fact is a lot of these countries have mature labor forces that are relatively unskilled, uneducated, and have a comparative advantage in routine work. So I don't think we should forget that in the short and intermediate term, we need to support employment generation across all types of skills, given the existing labor force. And so I just think ADB should figure out where job creation can be most robust and support the infrastructure or the policy change in those areas that can be beneficial. The other thing, we haven't really talked about global value chains and how the crisis may be affecting that as well. And that's important too, because specialization of poorer countries in routine tasks actually can be really important for employment generation. It was hugely important for China in its industrialization process. So maybe I'll just stop there, given the time.
Fantastic points, Albert. All of them jive so well with at least in Southeast Asia what are thinking. But I'm sure colleagues participating from many parts of ADB they'll agree. Peter, any thoughts from you?
Well, I don't feel like I'm qualified enough to sort of advise ADB on what to do.
Oh, I think you can.
Now. I think, but I think there are two. I think there's one So, Yang, you mentioned the digital divide among children. So I think that once we close schools, there is a huge risk there will be a group of children left behind. So, and quite often the governments don't really have tools to respond immediately to that. So I think that's one important challenge and very important in the medium and long term, how to keep these kids inclusively on track in terms of education. And I think that the other potential, there might be actually opportunity for introducing more internet or digital solutions in the governance, as one of the comments mentioned. So for instance, countries like Greece or Poland, which are quite moderately affected by the pandemic in Europe, to some extent, it may be because they were just lucky that in the last few years they have rolled out like digital healthcare. So you don't really need a paper prescription. You can do it. You can get an online prescription, and so in a way they were just lucky because this was rolled out in the last few years. So suddenly you could move to healthcare, which don't really require people with all other non-severe issues to show up in a hospital or a primary care center. And it's similar with the infrastructure in education and so on, or in social security or public employment services. So this may be an opportunity where if there are some vested interests that may block sort of a more thorough change in how the government services are provided, this may be a moment where this type of investments may actually be easier to do and useful in a short or medium term as well.
Thanks very much, Peter. Yeah, there is a whole host of winners and losers issue here that we will be coming across. And I also wanted to, as my colleague Savada-san has acknowledged on the sidebar, referring back to the points you made on issues such as network effects and particularly taxation. That is a key priority for ADB as well in the broader context of domestic resource mobilization, as well as things like BEPS, the basis erosion and profit sharing under President Asakawa. So we are looking at these issues quite closely too. So thanks for highlighting those as well. Let me go to Sinyong and then Samir before we conclude and thank everyone. Sinyong.
Yeah, well, thank you for excellent discussion. Well, I'd like to just focus on a couple of things only for the short term and then long term in the ADB support. In fact, as I included and discussed quite a bit, in the short term, it's a crisis time. We do need to protect the most vulnerable, and then especially providing the targeted support for people who might be affected for a really, really long term. So the government have been doing a lot, like in the providing the subsidized employment, strengthening the unemployment benefits. For like a paid sick leaves and then extending the temporary sort of like a health insurance. We need to do more. Absolutely, providing those essential support for the people who really need to survive. And trying to minimize any long-term, long-lasting impact on our future. And then for the future. Going forward, long term, I do actually agree with Albert about the direction that we need to think outside the box of other options, including the universal basic income or like some sort of like minimum the social protection security for much more flexible labor market structure going forward. We are not going to reverse the trend. I think the COVID does accelerate this trend that people are going to work as a freelancer and we are going to be digital workers. Platform workers are not really effectively provided these insurance support like employment benefits. Maybe that is not really the best solution, as Albert provided already. Like, somehow this may actually offset somehow these flexibility these platform provides for the labor market. So we have to think a bit differently from the traditional labor market structure, traditional social security system. And we really need to think about these things together. I feel that ADB can provide this knowledge support, providing this kind of like a platform to engage this policy dialogue. Also helpful. We are continuing to do the research on the implication, identifying where we can provide this knowledge and technical support. Thank you.
Thanks very much, Sin Young. Lots of good points. Samir?
Just quickly, first of all, I just wanted to thank Albert and Piotr for really engaging discussion and participating in this webinar. Thank you, Sin Young, for bringing the basic universal basic income, because that's what I was going to end with by saying, as Albert pointed out, that moving away from sort of not having an employer-linked social protection to something that's de-linked from employment is very important, especially if you want to cover a large share of workers in our part of the world, and that's something to think about. But of course, as Ramesh mentioned about fiscal space, that comes into play, and we have to think about that carefully. But I think in terms of one example I can give you in government readiness is that from Indonesia during the crisis, even though there was a sort of a political support and buy-in to scale up existing social protection schemes, the data, the beneficiary data wasn't up to date. It wasn't regularly kept. Something that's something so specific, and you would think it's not as important, but it's critical if you want to roll up or scale up social protection programs during crisis, right? So we need to invest in government readiness in some of these areas where the data of beneficiaries are kept well. Lastly, in terms of ADB's engagement, Ramesh knows, of course, I'm a bit biased, but I think we need to work more in sort of, social protection, skills development, and also generally speaking, using the knowledge base on the nature of work and labor markets, sort of having more programs and projects focused in those areas, I think will be critical. Thank you. Over to you, Ramesh.
Thank you so much, Samir. And once again, thanks so much, Albert and Piotr, for joining us. It's been fascinating. I think, clearly the time that we had is not enough. But I think, what we should do is to find another opportunity to discuss some of these issues that have been mentioned, that you have raised and that have come in the comments as well. But clearly also, certainly there is a fair bit of work ahead, both in terms of thinking, in terms of looking at data, evidence that is emerging in our countries, as well as what kind of public policies and what is the role of the private sector we do need to look at. So there is a whole bunch of issues that certainly from ADB's point of view, both on analytical work, knowledge capacity building, as well as in terms of operationally through lending projects to public sector, as well as non-sovereign lending that we can do. Lots of very interesting insights. Greatly appreciate both of you joining. And again, Peter, not to mention the time difference, but I do greatly appreciate you joining early in the morning. And to my own colleagues, Sin Young and Samir, thanks so much for very insightful presentations that led to the discussions. And I saw some time ago, we had about 125 participants at the height of it. We still have about 100 people, so that's fantastic. Shows clearly the interest that everyone has in this topic. So thank you all so much again, and thanks to the fellow department ERCD for giving me this opportunity to moderate. I've learned a lot. Thank you all so much, and have a good day and be safe. Thank you.
Thank you.
Thank you very much.
Bye. Bye.
Thank you.
Thank you.